Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. It's Wednesday, it's November 15th, and as you can see here from my shirt, I am highly volatile today. I think that's appropriate in light of what we've been seeing in the market, right? A lot of volatility. So it's about 7:47. We've got the market opening up in about an hour and 43 minutes, if I could still do basic math. Now, folks, we had the CPI report tomorrow. We had the CPI report yesterday, and the CPI report was extremely positive. It shows that clear evidence that the Fed is making progress, and they're probably going to push another rate hike down the road, which made investors very happy. Today, we've got the PPI, and we're going to be looking at ex-food and energy. We're looking at about 2.7 as well, but the annual rate is they're looking for a decline. So if this number is below 2.2, again, it means what the Fed is doing is working. The question is, how much firepower does the market have left? And we'll get into that in a minute. So you got retail sales today, and the consensus is ex-vehicle and gas consensus is 0.2, lower than before. It'll be very interesting to see how these reports shape the market. And it's interesting because these reports come out about an hour before the market opens, about 40-something minutes from now. So we'll get a really good indication of how the market will open based on these reports. Also today, during the day session, you also have petroleum status report. So if you're an energy trader, be careful trading around 10:30 in the morning, because you may get a little bump or a little downside in energies. But I think these two reports will be very instrumental to see how things are coming along. Now, I've mentioned earnings. Boy, oh boy, what earnings today? You've got Target, which already came out way better than expected. The stock is up like 15 points. I'll show you in a minute. You've got Cisco, you've got JD, you've got PanW. I don't know which ones of these. You got TJ Maxx. A lot of mixed, a lot of tech, PanW, Cisco, retail. So it'll be a very interesting day for both tech and retail, the two sectors that I happen to be watching. And then tomorrow, you've got Walmart, Applied Materials, Alibaba. Friday, you barely have anything. So again, watch out for these stocks. And I'll just take a quick look right now at PanW just to see if it already came out or not, or if it's tonight. I could see usually right away. Looks like they might have come out. They look like they're doing pretty good here. So it looks like they have. Yeah, it's up about 4%, probably so. I'm guessing. Then Target already came out. Let's talk about Cisco. Let's see if Cisco came out. Really good time to come out with earnings with all of this bullishness coming out. Cisco has not come out, but Cisco's right at that 100-day moving average. TJ Maxx, let's take a quick look. Why not? We have time this morning, right? TJX. Hasn't come out yet, but boy, oh boy, that looks pretty strong. But we don't seem to have a lot of volatility yet, so probably they're coming out after the closing bell. But look at Target. Whoops, messed up here. Not good year, Target. You could see right here, Target came out up almost 15%. That was very, very, very bullish. So this is good for the economy. This is all in line with what we saw yesterday. The question is, are we going to continue seeing the bulls run up? Let's look at the SPY and let's look at some data. So we are now, let me just back this up. We are now, and I told you got to watch out. These levels are right here above us. We are now well, and very close to swing highs. If you go back a couple of years, you will see that the S&P all-time high is at 479.80. We're at 450. We got to clear this level right here, and we got to clear this level right here. And that first level, this first hump, is just a little bit ahead of us. And that's a major, major hump. Now, I like what I'm seeing here, but folks, sometimes markets move a little too much too fast. So we could see another breakout here, but, I don't know. One gap, two gap, nice consolidation to the upside. Another gap. I don't know. I think we're going to consolidate next couple of days. And then possibly see more upside. But I think this is overdone. Now, here's a big mistake that I could be making. I could be trying to pick tops and bottoms, and I don't want to do that, and we'll have more information today. All I'm saying is it's uncharacteristic. It's uncharacteristic for the SPY to have so many gaps without some degree of a pullback. Also, we're getting a little bit above the 8-day EMA. That's making me a little nervous. So I'm not saying that I'm not going to go long and you should go short only. All I'm saying is you got to be careful. We're coming up to a major resistance level, and you got to be careful around here on the SPY. That level, by the way, is at 453.72. On the QQQ, on the other hand, let's look at the QQQ, which tends to overreact. You'll see that the QQQ are we at an all-time high? I think we are. Nope, we're not. All-time high is right here at 403. Yeah, let's go back a little more. So this is the all-time high, 408, 400. There's still a lot of territorial resistance right here in this area. So I would be very, 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 very careful because we're literally coming up to this line right here. And that's a major, major point in the market right now, exactly where we're at. So let's be careful here. Now, we could cross above that level and go above, but I would be very careful right now because earnings are pretty much behind us. Fed data, we kind of know where we stand right now. Most of that is priced into this market. And again, we've had nothing but straight upside moves. So I think it's time to start getting a little cautious right now and a little bearish. Now, personally, I have two shorts right now. I have this stock right here, Love, and it's not loving me at all. Probably going to liquidate it, going to give it maybe an hour or two in the morning and then liquidate it if it doesn't start coming down. It's just not doing what it's supposed to. But I have another one, this one here, and this one's actually behaving much, much better. I kind of like the way this one's behaving. This one barely bumped up, still below the 8-day EMA. So always rely on the daily chart. But as far as the S&P, let's look at the Dow Jones. Just wanted to kind of ran off tracks here. But be careful, be careful, be careful, be careful at these levels. And look at the Dow. You've got a lot of resistance right here. I hope you're paying attention to this, folks, because there's a lot of resistance, and I'm just getting a little nervous that the market could be a little toppy around these areas. Because look at this right here. You got this resistance level right here. Right? So we got to be really cautious right now. And I mean, again, look at this. We went from 32,500 to 34,000 to almost 35,000. We gained almost 2,500 points in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 15 sessions. That's huge. That's huge. So I wouldn't be surprised if the market backed off. If you have some weak stocks, you may want to stay in them. They may come down your way, but be careful right now. Now, let's look at a couple of more sectors. This is important because you got to have some perspective on these key levels. So semiconductors, AI stocks, if you want to call them, they are making a swing high right here. This is really good for the overall market, but again, be cautious. Typically, when you see these type of moves like this, they tend to cool off a little bit. Doesn't mean it's a permanent, this is the top and we're going to go down. Doesn't mean that at all. I'm just saying that for the time being, the markets are just a little over sizzly. And I think it may be a good time for them to start cooling off a little bit. Also, to prove my thesis, look at this, I sound like a professor. I'm just highly volatile, not a professor yet. The bond market's down right now. This is not good. See, look at this. Yesterday, the bond market rallied hard, right? And you could see the bond market rallied right here out of its range, went to the upper end of this triangle that's building up here. You could see it in red. But today, it's inside the triangle. If we don't see the bond market making higher highs, it's going to be almost impossible for the stock market to continue moving higher. So once again, another red flag. A red flag in the stocks in so much as they're just going up a little too fast. Not saying they're going to bottom out, top out. Just a little too much flight, in too much momentum. But again, just a small pullback. And I told you about a month ago that I think because we're in a strong seasonal period, November and December, I think we're going to go up and then have mild pullbacks, go up and have mild pullbacks. So far, we've been going up, haven't had too many mild pullbacks, but it's time. And also right now, bond market's already a little down. We're inside this range. If we move below this blue line, which we've only been above for a day and pre-open, it's going to put some bearishness into this market, and the bears are going to start waking up. So again, watch the bond market very, very, very closely in light of the PPI retail sales. Keep an eye on it before the opening bell. Now, let's talk about global economy. Market participants digested strong industrial output, retail sales data from China, which is good, while bracing for the PPI and retail sales data. Yesterday, the Dow posted a 2-month high. Tech Nasdaq posted almost a 4-month high, 3 3/4-month high. Home Depot climbed 5% and it's still up. And Costco's doing well. You're welcome. I gave you a nice Costco trade. yesterday. It's up about 5 points from yesterday's close. Labor Department reported Tuesday consumer prices were unchanged in October. On an annual basis, core CPI eased. That's huge. Goolsbee welcomed the latest data indicating decrease in U.S. inflation, but emphasized there's still ways to go before reaching the 2% target. Progress continues, though we still have a way to go. I agree. U.S. futures are pricing in a 90% chance that the Fed is not going to take any action in January. It was like 25% before that they are going to take action. Now it's only 10% that they're going to take action in January. It looks like they're going to kick the we're going to increase rate can down the road another couple of months, which is why the market got so happy. But the problem is, folks, there's still a lot of unforeseeability. We still don't know, and we don't know for how long they'll be here. I think rates are going to go up a little bit more, just a little bit more. But we're almost there. We're near the end of the cycling. Earnings, Target, came out with amazing numbers. Cisco's coming out today. TJ Maxx, PanW, NTES. You got to be NetEase. You got to be very, very careful today trading because the market's a little extended. It's a little hyper bullish. Volatility is really high. We're getting near key levels on major indices. And the bond market so far is not cooperating. So be careful. Again, doesn't mean we're going to drop like a rock and undo everything we did yesterday. But we may have some two-sided volatility. And it wouldn't be crazy for folks to take a little profit from yesterday, right? Yesterday was a huge day. So be careful today. Be careful. It's not going to be as directional as yesterday was with gaps and all that. Unless today's numbers just, I'm making this up, but just totally off the charts. So, and keep your eye on earnings. Some of these stocks already reported, and it can go either way. U.S. House passed a temporary spending bill that will prevent government shutdown once again. That was not a big surprise. They do it every single time. It's very political. We have PPI today. We're looking at the PPI. I'll tell you what we want to look at. We want X food and energy year over year to be less than 2.7. That's all we care about. Less than 2.7. And this number, the regular number, not the core number, to be below 2.2. Anything below 2.2 and 2.7, and we're good. That's coming out in about half an hour. Let's continue this. This is fun. So retail sales is coming out today. Core PPI, we covered that. Crude oil inventories is coming out today. Europe, China, and Japan keyed off of U.S. big time. You could see here closed higher, up 0.46. Welcome cooler than expected inflation data in U.S. and U.K. Same thing with China, closed higher, decline in U.S. inflation. Remember, U.S. is a big part of their economy. Japan closed sharply higher, topping 33,000 psychological level for the first time in 2 months. Thank God. Driven by robust corporate earnings, optimism in the Federal Reserve. Real estate, energy, and tech stocks led the gains. Yeah, real estate was really bullish yesterday. This news is very positive for interest rates, and real estate really rallied off of it yesterday. So let's talk sectors since we're already talking about everything. Since we're talking about sectors anyway. So semiconductors, technology is leading right now over a 6-week period, over a 3-week period. Home builders, yes, home builders, which were in last spot like a week ago, and semiconductors are now leading, and technology and real estate, home builders, technology, interest rate sensitive stocks. Invesco, consumer discretionary, even small caps got a little bit of a lift. Now, what about the last 5 days? Semiconductors, home builders, real estate, technology, small caps. What's not been seeing a lot of love the last couple of days? Communication services, the Dow, the blue chips, the retail. Today, a retail report, hello, consumer sales, utilities, energy, and healthcare. So you could very clearly see that this interest rate, this lower interest rate has sparked fuel in more speculative type of stocks. Industrial, basic material. As far as healthcare, energy, utilities, the safety stocks, they're at the bottom. So market is starting to become very hypersensitive to lower rates, which is what happens when recessionary period ends. Let's see if this can keep moving or if the market's going to revert back to this. But right now, you're clearly seeing healthcare to the downside, semiconductors. It's very clearly we're seeing speculative sectors. These are very speculative sectors for the most part, except for communication. That should be up here too. Consumer discretionary. Here's QQQ. But real estate, technology, semiconductors, That's where the action is right now. So let's see, what would we trade right now to the upside and downside if we had a choice? Well, let's see. There's just too many options right now. Chips are looking amazing. I mean, amazing. I'll be very honest with you. Oh, remember I gave you Uber? Could be potentially in the S&P 500. I'll tell you what I really like right now. I like Micron. I like Starbucks. I like Micron and Starbucks. And I also like SMH. So Micron, Starbucks, and SMH to the long side. Everything just looks so damn good right now. It's hard to pick a good stock because everything looks good. That's the problem when markets get too bullish. It's hard to gauge strength. Now to the downside, not going to be that easy. To the downside, let me give you a couple of good ones. PFE, Pfizer. That's a bearish stock. That's a bearish stock. The stock that we currently have in the day trading room or active trading room, very, very weak stock. Those two stocks, LTHM and Pfizer. Pfizer. If you want, you can go right here to the 90-day low scan. You should have it in your members area or 20-day breakdowns, and you could see what's breaking down on a 20-day period right now. But you'll see most of it is not stocks. Most of it is ETFs. This GILD, G-I-L-D, isn't looking good. But for the most part, those two stocks I gave you. Now, before I let you go, I went on today for a long time. Today's the day. Today is the day. We will learn about what could be the best kept secret of all. It's happening at 1 p.m. Eastern Time. Former Wall Street VIP will reveal his pre-market 7 a.m. signal that he sworn for by 3 decades. 3 decades, man. This pattern will reveal what could be the day's top stocks for over 2 hours before the market even opens. I can't wait to see it, so join him at 1 p.m. and we'll find out for ourselves. It's going to be very exciting. Click the link below. Make sure to like our channel, subscribe to our Telegram channel. Go to rogerscott.com/Telegram and check me out on YouTube. Go to YouTube and go to Roger-Scott in the search box and you will find me. Bye, guys. Have a great day. Sorry I went a little too long today, but I had a lot to say.